Hello everyone and welcome back to today's Morning Report Charts Appraisals on Monday the 5th of September with me, Richard Perry, market analyst at Antec Markets. We're going to look at sterling dollar now, and we've had another jump up on sterling dollar. We had the services PMI data for the UK today, and it's positive, again much better than expected, and sterling has strengthened on the back of that. This improvement that we've seen in sterling over the past week pretty much well, sterling was an outperformer on Friday. The dollar initially was weaker against all the forex majors, but then recovered, lost ground, but pretty much against all of the majors apart from sterling, where sterling closed higher. And that improvement in sterling continues really for the last 3 days in a row of closing highs. And today it looks like it's putting more pressure on the upside. This broken downtrend, the move above 32.70, 32.80 has sort of confirmed the breakout. You're now trading above the 33.20, which is the 23.6% fib level of the big Brexit sell-off, and it certainly looks as though it's going to be moving towards a test of this reaction high of 33.70, which was the early August high. But you look at these momentum indicators, you say, well, configured positively, RSI back towards 60, MACD lines back towards neutral, stochastics rising. So if the RSI can start to sort of build and hold above 60, that would suggest, I think, it's increasingly positive momentum, and certainly testing that 33.70, if not 34.70, which is the July high. And these levels, I think, are generally all sort of playing out in a bit of a range phase, really. It's sort of found the higher low support, and it's pushed up above the pivot line at 30.60. You've got gains that have moved above that that old downtrend as well. It's pretty much sort of moving into more of a range phase than anything else, I think, on the on sterling dollar. Now, this is the hourly chart where you've got the lower. The higher lows and higher highs in the last few days. You need to sustain this improvement. I talked on the morning report, I think, about a mild sort of bearish divergence. Very, very slight negative divergence. Nothing too significant, but something to keep an eye on, I think. And I think that the 32.50 support on sterling dollar is important. Obviously, we're 100 ticks up from there, so quite a long way back at the moment. But it's factored in the improvement in the services PMI's data for the UK, and certainly at the moment sterling remains strong. So I think you've got to still continue to back this as a recovery play, but ultimately I think this is going to turn out to be a range play rather than sort of a significant sort of base pattern. I don't expect this to be sort of breaking significantly higher, and I think that there's a fair amount of overhead supply. Obviously starts at 33.70, then 34.70, and just above 35 as well. So the overhead supply will start to sort of play a bit more of a role, I think, and we've got to bear in mind that also it's again sort of back towards this 23.6% fib level. Yes, you're mildly above that, which is what happened on the August move, but still I think it's a basis of sort of where the overhead supply will start to come in, and traders might start to think about profit taking. So I wish you good luck in your trading on cables today. I think very near term, I think we're going to continue to pull this one higher, using any sort of dips as a chance to buy. But just be careful on your sort of medium-term trades, as I think this is going to turn out to be a medium-term sort of range play. So I wish you good luck in your trading, and I'll speak to you later. Thank you.